Silver is significantly undervalued compared to other metals from 1,980. It's the sole major metal, even if you look at some specialty metals and right across the board that is trading below its 1980 peak. Gold, base metals, platinum, group metals, some of the rare earth metals, they're all way above their 1,980 highs. Silver is the only one that's in fact less than half of its 1,980 high. That's one measure. If you look at inflation-adjusted prices. Still, silver is something like 90% below its 1,980 high. It's just a very, very bullish setup. And then we can get into things like industrial and investment demand. But silver really is very much unlike any other metal. If you look at the fact that it's both monetary and industrial, it's about 50-50. And I think both of these sides of silver demand are going to explode in the next few years. So there are just so many huge drivers for silver going forward. It's about 55% of silver demand is industrial. And so the balance 45 is what I consider some sort of investment. So it's things like actual investment, people buying physical silver to hold things like jewelry, silverware. And so if you add those together, in my view, as I say, they're kind of some form of investment. So it's about 50-50 roughly overall industrial and investment demand. And so half of the silver supply every year is consumed if you consider that half of it goes to industrial. So there's about 1 billion ounces of supply every year, just roughly of silver supply. And about 15% to 20% of that comes from recycling. So naturally, some of the industrial demand or use does come back into the supply. But a really interesting note about silver is that only about 28% of silver supply comes from what we call primary silver mines. The rest comes from mining. Other metals come from mining gold, copper, lead, and zinc. And so silver is highly dependent on the production of those other metals. And if you get perhaps some kind of a slowdown or not more than 2/3 of silver supply depends on those other metals. So if the price of silver goes up, demand for silver goes up. Unless the production of those other metals goes up at the same time, you're not going to get more supply, or at least limited, since, as I say, about 28% comes from primary silver mines. And besides that, silver is also the most conductive metal. That means that it conducts electricity better than any other metal. That's measured on a scale up to 100. And silver is the standard. Silver is the 100. Copper is, I think, a little bit below at 95 or 97. Gold is, I think, a little bit below that, and it's also the most reflective. It reflects 95% of light. It's the single most reflective substance. And if you look at what's happening on the demand side, you can't deny that solar over the next years and decades is going to be a huge driver for silver. The fact that it's highly reflective and conductive has a lot to do with silver being used in solar panels. But right now, of overall demand, silver is 12%. And if you look at overall industrial demand, it's more than 20% of all industrial demand goes only to solar. And so this big green energy shift, I think, is going to probably at the very least double silver demand over the next 8 to 10 years. And you've got all sorts of other projections. The International Energy Agency saying that output from solar is going to be something like nearly 9 times what it is today, just in the next 8 years. And then you've got the Inflation Reduction Act in the US. That is very, very bullish for silver. Something like $320 billion over the next 10 years is going to go towards solar. And then you have technologies in solar panels where the next technology is supposed to require about 50% more silver. And the technology to follow on that, something like 150% more silver per panel. So it's really a very bullish outlook. Central banks and central planners intentionally keep interest rates relatively low while inflation runs higher than interest rates. When we had rates near zero, and this only goes back past decade or so, and for an extended period, multiple years of rates near zero, those were the lowest rates in 5,000 years of history. And so we are in uncharted waters. It's true that rates are rising right now, but if you look at, for example, in the US, rates, it's easy to see that rates are very, very much below the inflation rate. And that's not by accident. By having central planners keep interest rates well below inflation rates, there's a huge loss loss to purchasing power, but at the same time, it helps governments with huge debts to be able to repay those debts over time with depreciated dollars, so it makes the debt manageable in that sense. So that's what I call financial repression. And silver has been a great hedge against financial repression and against inflation over millennia. It was the first truly international currency. It's always been an inflation hedge since then. If you look back, I did the math. I went back and looked at 1922 silver sold for 60 cents an ounce. And if you use the official rate of inflation, just over 3%, let's say average annually per year, since then, silver should be at about $11 an ounce. So silver has more than doubled official inflation rates and probably is a lot closer to a fair return on what is real inflation. So over time, it certainly really does retain its value. Central banks, they're going to be unable and or unwilling to fight inflation, to really truly fight inflation, because if you were going to fight inflation right now, effectively, you'd have to have rates up near 8% or above 8%. So we're a long way from that. There's a huge gap, and Powell has mentioned their big concern. It's no different in Europe, for example. Lagarde has recently said they've both said their main concern is that consumers will start to anchor their expectations around high inflation rates. And what that would do is that would have businesses start to factor in higher inflation rates and act accordingly, so that businesses may slow down, will do less hiring. People will either do less consuming and or in some ways more consuming of certain things that are not things that will not perish, for example. And you may try to get a jump on inflation and stock up on certain things, or maybe buy a car or appliances or things like that in advance of expecting even higher prices. So that's really one of the things that the Fed is concerned about, because that could really spiral out of control for them. And that's that wage price spiral that they're concerned about. People will start to ask for higher wages as a consequence as well. So if you look at what is happening with commodity prices, well, the reason that I think we're going to see silver really play out with much higher price levels over time is that commodity prices will continue to rise. There's no question that we're going to remain in what we call a negative real rate environment. So inflation, despite central banks talking about and raising rates, net rates are going to stay below zero. And that's going to help keep commodity prices void and eventually rising. I think we're in a new secular commodity bull market, and that's going to eventually get people to lose faith in currencies when they see that for an extended period. Their money just simply buys them less and less and less in a more obvious way every year. It's one thing to deal with 2%, 3%. You're dealing with 7 or 8%. It takes something like 8 years or so before you lose half of your buying power. And so precious metals have always been a hedge against inflation. People are going to return to it in a big way when they see that this is the one sector that has been outperforming, and commodities and precious metals in particular are going to hold up.